Good morning traders and welcome to the daily call today, Thursday the 6th of July. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let us have a look at what's happened overnight in the UK. The service sector is also rising slower in the UK with PMI numbers coming in at 53.4, slightly under the forecast. The GBP USD now, after shooting up to the 130 levels last week, has produced lower highs and lower lows, putting the currency pair at risk of a steeper decline towards the 128 level. So let's just keep an eye out on that. The big event, or not so big event in terms of market moving, was FOMC meetings. It seems investors were looking for the minutes to reinforce Ms. Yellen's hawkishness, but instead it highlighted the concerns of some members who believe that the progress of inflation has slowed down. The report itself was not all doom and gloom. It did, however, show a division within the Fed as to when to start unwinding their asset purchase program. Overall, there was something for both the bulls and the bears, and all eyes will now be more focused than ever on the non-farm job numbers. So that's tomorrow, so just keep an eye out on that. All right, it's time for our chart of the day. The chart that I have found for us today it's a Euro Swiss daily chart. It's not your traditional channel. It has got the two touches on both sides. Well, now this is the first time that it's touching on this side, so if you were to try and trade it right now, it would be what we would consider an aggressive trade. Important to note here is that we broke up, and this level here that now we can confirm as a line down the bottom was previous resistance, is now acting as support, so it kind of reinforces the channel. If you're a very aggressive trader, we already have an engulfing candle and it's ready to go. If you want to be a little bit more conservative, we can try and wait for an inside candle and see what happens, just in case we break up higher. And of course, if you're super conservative, well, then you won't even try and trade this touch. You'll wait for it to come down to these levels there. So there you have it. That is our chart of the day, the Euro Swiss on the daily. I'll just make a comment on yesterday's chart of the day, which was the US yen. It did not trigger. We can see that yesterday's candle shot up, so we've had to cancel that order. However, the pattern is still in play. And we can see that we need to wait for today's candle now to finish, and if today's candle ends up being an inside candle, well then again it would come into play, which would be for tomorrow. So it's that we had to cancel our orders, but the pattern is still on our radar and we could still trigger a trade on the US yen daily. All right, let's now have a look at what's about to unfold in this session, and we'll start off in Australia. At 11:30 we have the trade balance is due. At 10:15 we have non-farm employment change, so this is not the non-farm, the big number that was tomorrow, but this is the employment change. At 10:30 we have trade balance from Canada and unemployment claims from the US. At midnight, non-manufacturing PMI numbers from the US, and at 1 o'clock we have all inventories from the US as well. So there you have it. Possibly the CAD, US CAD is going to be a big trading pair tonight, so keep an eye out on all those. As always, guys, please feel free to contact us if you do have any questions. Follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, hope you all have a fantastic trading day. I will talk to you tomorrow for the daily call. Bye for now.